Hi, this is Tony Sagami. Hey, there's been something very, very interesting and I think monumental that happened in China this week that should have a big impact on your investment decision going forward. What I'm talking about is a man named Mark Pinto. Now, most of you have never heard of him, but if you're in the technology business, he's one of the most important figures in Silicon Valley. His position, he is the Chief Technology Officer at Applied Materials. And I mention him because he is the very first Chief Technology Officer from a U.S. company to actually pick up and move to China. And that tells you how important that China is to American technology companies. Now, he may be the first, but he's not the last. Now, Applied Materials is no small company, and that's one of the biggest names in Silicon Valley. And it's the world's largest manufacturer of semiconductor equipment that's used to make chips, solar panels, and LCD TVs. Now, what Applied Materials did, they built a huge research facility in Xian, China, and they're going to employ upwards of 3,000 people there. And also, to give you another idea how important China is to Applied Materials, they held their annual shareholder meeting in Xian. And so that should send you a very clear message of what's going on there. What's happening is China is building a technology economy that's going to soon not just supplement American parts and do assembly, but actually compete against us. So more than ever, if you're a technology investor, you have to take a look at what's happening in China and figure out if you're going to compete against China or sell to China and thrive. And so what you need to do is look at the companies that are getting it right. For example, some that are General Motors. Now that China's the largest auto market in the world, they opened a giant research facility in Beijing. And China has become kind of the hybrid car capital of the world because of their technology for electric batteries. IBM, Microsoft, Intel all have significant factories, research, and presence in China. Now, the reason that they're going there is not just because the market's so great, but also because the engineers are so reasonable. You can hire an engineer with a master's degree in China, and it only costs you about $700 US a month. And so that low wages, low cost, and the booming market is why these companies are flocking to China. There's several stocks you could take a look at, take advantage of the trend. For example, Taiwan Semiconductor, the ticker is TSM. Asia Info Holdings, the ticker is Asia, ASIA. Or CDC Software, that ticker is CDSC. CDC Software. But you know, if you really wanted to take a very simple and effective approach at participating in the Chinese tech market, you could take a look at the Claymore China Technology ETF. The ticker on that is CQQQ. CQQQ. And what this ETF does, it seeks to replicate the performance of the AlphaShares China Technology Index. And the largest holdings in that are companies like Tencent Holdings, Baidu, NetEase.com, Alibaba.com, and BYD Corporation. You might remember BYD because that's Warren Buffett made a huge investment in that Chinese hybrid electrical car company. So the Chinese tech stocks are going to be hotter and hotter and hotter. And if you want to get in on that train and get away from the U.S. disaster that's coming for the technology stocks that don't compete against them, these are the kind of companies and ETFs you should take a look at. This is Tony Sagami signing off.